Hi guys, hope everyone is having a good weekend. I know that it's Labor Day over in the US at the moment, so hopefully you enjoy Monday off as much as I will. Um, what I want to do is really just go through the market, and I'll have about 20 charts this week that I feel like should be on your radar for the forthcoming week. As always, everything is completely backed up with logic and technical analysis, which is obviously what I'm known for. So hopefully you get a bit of value from this. But before I get into this, as always, please just pause the video and just make sure you're comfortable with that before watching any further. If this is your first time here, I do this every now and again. I like to throw out some ideas to social media, let you see what I'm seeing in the market. But the first thing I need to say is I don't believe in get-rich-quick schemes. I don't believe in day trading. I'm not in and out. I'm not looking at 5-minute charts. I think it's all bullshit. And, if you are somebody out there that is a day trader and you're using shorter time frames, you're probably not going to get a lot of value from this. Just to give myself a little bit of credibility, I am registered with the CMT Association. I am working towards my chartered status at the moment, working my way through my exams, and I love it. There's a lot of you out there at the moment that are obviously, stepping in the brown stuff when it comes to the markets. A lot of you are feeling like you're being knocked out. And the one thing that I probably want to just get across to you this week is we are coming into September, and September is a notorious month for being a little bit choppy. I think overall it has produced a negative return, and it is recognised to be one of the worst performing months of the year. So something to just bear in mind going into September. History doesn't repeat, but it very often rhymes, and it's absolutely something to be aware of. So if you like this video, please subscribe to the channel, give it a thumbs up, let me know in the comments if you feel like there's any charts that should be on your radar, and if you've come through on social media and you like the video, please feel free to share it with your followers and so forth. It all helps to kind of get this content out there, because I do genuinely believe that this is probably the best free content that you get on the stock market on social media today. So what I'm going to do is just run through the charts again that I feel like should be on the radar of everybody. Maybe actually the first place I maybe want to start is really with the S&P 500 index SPY. SPY is currently in a very tight range at the moment. Now, what that essentially means is the stock market's just going sideways. Now, when the stock market goes sideways, you will have stocks that go up, others will go down. There's not any real consistency or logic with price. And that's the frustrating thing. And I think, especially when I look at the emails and the messages that I've received over the last few weeks, I know that there's a lot of you that are perhaps in a bit of turmoil. You don't really have an idea of the direction of the stock or the market. You don't really know what's going on. But I think that chart probably explains it better than any. We obviously had a bit of a sharp decline recently, but it's just moving sideways. And when you get a sideways market, it's the one market that I think everybody struggles in. And when we have that type of market, and this is something that I've been communicating over the last few weeks, is it's very much a risk-off scenario where you're just simply looking to be very minimal with your risk. You don't want to take on too much, and you need to be very, very selective with the positions that you're taking. So it'll be very interesting next week to see whether or not we get follow through here, or whether or not we just get another outright rejection of this level and it moves downward, and that will mean that stocks will move downward, and that's the frustrating thing with a sideways market. But I'm going to start off with MasterCard. Now, MasterCard has obviously performed very, very well, along with, you could look at Visa, and, there's various other stocks that you can look at as well. But, if, MasterCard is one that you're currently looking at the moment, or maybe you're looking for an idea, it's performing very, very well. in an uptrend. My time horizons for my trades are generally weeks to months, and I think that MasterCard at the moment probably fits the bill. It is fast approaching the $300 barrier, so that's something to absolutely be aware of. PayPal, a few weeks ago I highlighted this one as an area that you might want to consider. Those of you that have obviously gone in have been rewarded with a 10% move to the upside in the last couple of weeks. I do feel like it's about to potentially present further opportunity, maybe if you want to compound on your existing position, or maybe you want to take a brand new entry into the market for PayPal. I think that chart probably represents what my views are. Square Inc, another payment processing company, again, it has struggled by and large. Since we had these declines, there's a very clear level of resistance there. So if you are somebody that believes in this company, if you're somebody that wants to perhaps look to take an entry into the market on this one, there's a very clear risk to reward proposition being offered here. There's obviously tremendous upside provided the market plays ball, and I think that's the caveat to everything that I'm talking about here, where we really need to see the market play ball in order for these charts to play ball with us as well. It's very much of a double-edged sword at the moment, so be very, very selective with the positions that you're taking. Blackstone Group is a stock that I've personally got a very close eye on at the moment. I think the chart probably tells you everything you need to know about my thoughts on it. We're just kind of hovering around a logical area of resistance at the moment. It's obviously performed very, very well year to date, up 85%. And I think there is a logical upside of another 27%. So absolutely, if Blackstone Group isn't on your watch list, it might be one that you want to add. I've had a lot of messages about Disney in the last few weeks now. This is the poster boy for Fibonacci at the moment, and it's kind of just moving sideways. I know that it's reported earnings recently, had a bit of a decline. It's found support exactly where you would expect it to find support. So that offered entry for those of you that were perhaps looking to move in. The logical expectation is that this moves back to around 145. I think if it can get above that, then that will potentially offer the next available entry. But I think you have to be mindful of the key levels where you might want to get a little bit defensive. I think below here you might want to get defensive, and absolutely below here you want to get very, very defensive. And I'm not somebody that holds on to positions blindly. What I mean by that is I've got more of a longer term trading mindset rather than a longer term investing mindset. There's a very clear difference, and I think when you have an understanding that it's really about being in a stock for as long as it's paying you, I don't really see the point in staying in stocks when the price is going down. I don't believe in dollar cost averaging down. It's very much a fool's game as far as I'm concerned. And Disney, absolutely bullish above this level. Probably still bullish a little bit above this level, but absolutely below here. For new entries, absolutely not. Microsoft have been asked about this week, just purely because everybody knows that I had a position in this. Absolutely, I exited the position on Friday there. Profit target achieved. We got a rejection, or what is potentially a rejection. I'm quite happy to move back in on Microsoft again, but it's kind of just, it's obviously following what tech is doing at the moment. Microsoft is the biggest component of the triple Q, and if you look at the charts, naturally they look almost identical. Tech is holding up very well. I actually fully expect Microsoft to go back to 150, but I think this just goes back to the trading mindset rather than the investing mindset. Is I understand what key levels of support and resistance are, and it all comes down to the plan that you have for the trade in advance. You should never go into a trade without a definitive plan, and that's certainly what I feel like gives me one of my many edges in the market. I don't do anything spontaneous. Everything I do is fully considered and fully planned out. Avalara is interesting. We're obviously in a very clear uptrend, and interestingly enough, one of my clients this week approached me, asking me my thoughts on the company on a technical level, because he works in an area, his business works in an area where they fulfill the need that he has for his business, and fundamentally he loves the company, and again, technically it's holding up very, very well also. So I think provided Avalara holds above this level, I think below it I'm probably not as bullish. I think you have to be mindful of the key areas of support and resistance, as I've said many times in the past. So this may well be offering opportunity at the moment. It is obviously moving sideways at the moment, but as we can clearly see, it's a very sideways, uptrend, which is nothing wrong with that. It's obviously performed very, very well this year. So yeah, I think Avalara is certainly one to look at. Okta, on the other hand, obviously reported earnings this week. We've had what might be the Wall Street discount. For those of you that don't follow me as closely as you perhaps should, I think I've got a mega popular blog on the subject. I've really recently just uploaded a video to YouTube about the Wall Street earnings discount and how you can look to profit from this exact scenario, where we've got a top performing company. The report earnings, now the earnings, a little bit of a lukewarm reception. Yeah, I accept that. But price has come back, and it looks like it's respecting very key support levels in the market. And I think, it's very, very straightforward with this chart actually. I think you just say to yourself you're bullish above this level, and I think below it, not so much. So if Okta's a company that you like, if it's a company that you're looking for a new entry into the market, very, very clear, bullish above the level, below it not so much, as I said. Salesforce, now, the first thing I've got to say about Salesforce is and this might well go down to the philosophy, because I know that this is a super popular stock and I'm asked about it all the time, where the past performance of a stock shouldn't really influence whether or not you continue to hold or blindly keep going back to the same stock over and over again. Now, what I mean by that is, if you look at the past history of Salesforce, yeah, it's been beautiful in the past. But, after a while, things start to just kind of look less attractive than what they once did. And that's just what we're seeing with Salesforce. It's not rocket science. And if you get into the habit of understanding that you're only dating these stocks, you're never marrying them. And with Salesforce, we're in a very clear downward channel at the moment. There's 12% downside here. Now, if you get a break to the upside, there's a justification for potentially looking to take a position into the market, to the upside. That might be something that you want to consider. But looking at the chart recently over the last kind of 12 months, it's not a particularly great looking chart. There's, as if you compare the chart with Avalara, for example, or Okta, what one represents the better opportunity for you. Fundamentally, Salesforce, I'm sure is incredible, but it just goes down to, you should only really be in the stocks for as long as they're paying you. And, at the moment, Salesforce is not paying anybody unless you've got in very, very low here and you're continuing to hold blindly. There's a lot of luck, in my view, that goes into that. So, might become interesting soon. Roku is fast approaching a logical profit target. clearly it's had the most incredible of runs, 500 and odd percent. I don't know if there's much more I can say about this. This is obviously one that I get asked about a lot. When's it going to end? When is this run going to end? Last year, I done an analysis of Rocky. Obviously, I like the company fundamentally and so forth. And my exact words at the time, when it was hovering around $30, I said to everybody, look, don't be surprised if this is above $100 in the next 12 months. Well, it's obviously we're up at $150. And yeah, I think if it's going to stall, it's likely going to stall here, much in the same way that it stalled a little bit here. But if it moves through that level, price just has a habit of it keeps on going. Those of you that get scared out because stocks are trading at all-time highs and they pull back for a couple of days, that shouldn't freak you out. New all-time highs are good, because when stocks create highs, they go on to create further highs. So it's never a bad thing to buy stocks at their all-time highs. It's a very good thing, and it's a mentality issue that I think a lot of traders have, where you're constantly expecting this huge pullback, but if price is going up and it meets all the requirements in your rule set and your trading plan, don't freak out because it's at all-time highs. All-time highs are good. Canada Goose, interesting one. Somebody reached out to me this week asking me if I thought that this was a good play, and well, I think that the chart, the first thing to say is, I mentioned this earlier, where history doesn't repeat itself, but it often rhymes. And looking at this, I was thinking to myself, where have I seen this before? And the answer is a few months ago. We've got this move to the upside, pull back. You can see that it's almost identical at the moment. Now, clearly, we're in a bearish environment. We're below, one of the key drivers that would determine whether you're bullish or bearish in your position. So at the moment, we're in a bearish environment. And, if this pattern holds true again, the expectation is that Canada Goose falls with it. It's not a position that I would personally look to take. I mean, absolutely, you could potentially look to take an entry here and, hope that, price does that. It could happen, absolutely. At the moment, it could well also be offering a very good risk to reward proposition. I mean, let's say you place a stop here, an entry here, and you think it's going up there. That's good amount of upside potential. But I think when you look at the percentage plays and what represents the best value, I just see easier positions to take than Canada Goose at the moment, unfortunately. If you're out there and holding Canada Goose, naturally, I hope it works out for you. I don't like to see anybody suffer in the markets. So yeah, that's my view on Canada Goose to whoever was asking. Lam Research, I think it's logical. It's obviously performing very, very well this year. I had a position earlier on in the year. It stopped out, really good profit. Thank you very much. I think for me, it's not offering entry at the moment. I think if we get a break above 220, then it obviously comes into play where you're looking back over history to see where you might want to, action profits and, compound that for the position or a new entry into the market. But it makes sense at the moment with semiconductors. SMH is doing really well. It's held up pretty well. So, yeah, Lam Research is obviously doing the business. Goldman Sachs, again, it's holding up pretty well. I think, I've been very consistent on Goldman Sachs. I think if we break below this level, you might want to get a bit defensive. But again, Goldman Sachs is one of those that might well be appealing to those of you that want a bit of exposure to financials. Sorry, nearly there. The Nike, whatever you want to call it. Nike is doing what you would expect. A few weeks ago, I presented a thesis to everybody and I said, look, there's a favourable chart pattern potentially forming here, and this might be an area that you might want to consider. That is absolutely holding true. It's obviously taken a little bit of time to get going, but it's happening. The expectation is that this should go to $88, $89, maybe $90. And if you get a follow through, then that would give opportunity either for a new position or maybe to compound. But Nike is doing as expected. Defensive play, McDonald's, I think, sometimes you don't need fancy technical indicators on a chart to know a chart is worth buying. McDonald's, I first highlighted this down here, just, I think it was 7 or 8 weeks ago. And now it's obviously performing very, very well. Very close to breaking out again, and I think that probably offers a bit of opportunity. Nvidia, again, stock I've done well on recently, and it's obviously on a downward sloping trajectory, but I think if we can get a break above that level, I think we can see that it's a very logical, clear area of resistance dating back to November. I think if it breaks out above that, then that's probably good news for Nvidia. So I'm very much watching this one closely. Hershey, again, just to go back to McDonald's, some charts don't need a lot of technicals on there. It's moving up, and it just goes to show again about the all-time high. You shouldn't freak out when it's at all-time highs. Yeah, you get little pullbacks here and there, but price is moving up, and we like stocks that are moving up at honeystocks.com. Costco, again, very, very logical area of resistance here, $300. So I think around here it is valid to perhaps look to profit take. If price moves beyond 300 and you get continuation, absolutely you could look to buy. But I think at the moment, as a technical trader, that's a logical profit target for me. I don't know if I really need to say much more than that. It's a very basic looking chart, but it doesn't need to be complex. And I think that might well be most of the information. I think obviously the market, as a whole, has been very, very challenging, I suppose, for many of you, as I said before. If you have enjoyed the video, please do subscribe to our channel and let us know what you think in the comments. Try to upload a couple of times a week, but some of you out there will be struggling pretty badly, judging by the emails and messages that I'm receiving. As I said before, I'm Sam, and I'm working my way towards my CMT designation at the moment. And I also run honeystocks.com trading school. And I think when I break it down to the people that I can help with their trading, I can't help everybody, unfortunately. I think if you're trying to fit trading around a career or a business, or maybe you're wanting to get away from day trading because it's not really giving you the consistency that you want, or maybe you're wanting to learn for yourself and not follow others. Maybe you want to trade with minimal stress, and maybe if you just want to align with a super successful trading group and have a bit more time on your hands, I can probably help you in some way. Because I think when you understand that it's about building a trading plan and having a rule set and applying that for your circumstances for the rest of your life, it's the key to success is not following others blindly. It's about learning to do this stuff for yourself. And I think one of the things that makes me different at honeystocks.com is I log, as part of my community, I log every single trade idea that I post to my group on my website for complete transparency. I have a code of ethics that I need to follow and adhere to with the CMT Association. So every single chart is logged. You can go on there. Now, I'm not, for at any point suggesting to you that you can go and make 1400% next year by following my trades. Absolutely not. What I'm saying is that with the charts that I post to my group, they are really for the guys that maybe have risk to allocate at that particular time. It's impossible to go into every single one of these trades because you only have a certain amount of capital tied up at any one time. But what that list should do for you is really just give you an idea of the kind of stocks that I'm posting trade ideas for, and you can weigh up whether or not that's something that meets or fits with the kind of stocks that you like to buy and so forth. It's not just about trade ideas. Obviously, I've got a massive emphasis on education because that's what I wholeheartedly believe in. But I also understand when to get defensive in the market, and my work has had a lot of attention in the last couple of years because we've had many significant drops in the market, and I've assisted my guys in getting defensive ahead of time. This was a post on the 1st of August just saying, look guys, this is something that you need to be aware of here. And I've done this routinely, every single significant drop, and all that is logged. I've got a complete audit trail of all my work over the last couple of years, and you're more than welcome to go and scrutinise that. But that's a big part of what I do as well, because many of you out there will be learning from losses and trying to pick up lots of different tips from YouTube, and you'll be learning from books, which there's just an overflow of information out there. Although the internet is obviously wonderful, I think in some occasions it can be a bit of a hindrance because there's so much information with technical trading and analysis, and trying to filter through all the noise is just it's incredibly difficult. And I think when you understand that it's really about just making sure you're not swallowed by the Wall Street black hole. And naturally, honeystocks.com, we genuinely believe in making a difference. You can jump onto our website, check out our client testimonials. We've got an incredible bunch of guys and traders, girls all over the world, and yeah, we're just a super cool, tight group, really nice community. I don't have any visions of growing my trading community into hundreds of thousands. I like a small, tight-knit group, and that's the way it's going to be. So if you feel like you would like to learn a new approach, feel free to reach out to us. You've obviously got the decision whether you want to carry on doing it the way you're currently doing it, or maybe you do want to learn a new way. But if you do want to learn a new way, it's pretty straightforward. You just need to jump onto our website, click on apply, join, pick a time, tell me what you struggle with. It's not, I don't overcomplicate things. If you are somebody that genuinely struggles and you want to talk to somebody about your trading and things that you can maybe implement, I'm not going to try and hard sell you anything. I'm not going to force you to sign up to something that you don't want to sign up to. Yes, absolutely, there's a service that we offer, but it's really about helping people. That's what we do. That's why we throw out so much free content. And if you're somebody that struggles, then feel free to talk to somebody about it. And we have opened up the calendar for the next 3 days. Obviously it's Labor Day weekend, but if you do want to talk to somebody, the calendar is there for you. You just need to pick a time. Give us as much information on the form as possible, because it saves a lot of time with the conversation, where we don't need to have that back and forth of what you struggle with. If I know in advance, I can just get straight into it. So if you're stuck around to the end, thank you very much for watching, and maybe we'll speak to you soon. Thanks.